this, we now have Rakesh Arora, founder at Go India Advisors, who's now joining us. Mr. Arora, morning, Shesha here, and thank you for taking your time out and joining us here on ET Now. And first up, let's start with steel, and we'll talk about other commodities also in a bit. Your sense on everything that is happening within the sector at a time like this, when steel prices usually don't go up because of monsoon. How do you read this and everything that's happening with respect to steel prices?
So, normally large steel companies take their annual maintenance shutdown during this period because it's a lean period. And so rebar inventory had fallen. So that's what has led to really the sharp move. We are seeing a little bit follow through on the HRC, as you mentioned, but that is largely driven by the cost push. Coking coal prices are up by $25. So that means an increase of around 1,500 rupees per ton. So overall, I think Q2, the margins will still be lower than Q1 by around 1,000 to 2,000 rupees per ton, depending on the company. So
And do you
overall, I
expect
think neutralish. I don't think they were very bullish, but yeah, neutralish for steel companies.
And do you expect steel prices to remain firm from the current levels, or are they expected to inch higher from these levels?
So we are still in monsoon, so there might be a little bit of up and down. I think the busy season starts only post, October, November. So I think if we can remain stable, that will be a good outcome.
And what about post November? That's when the strong period begins, which means we are expecting much more upside after that.
Yeah, so see, rebar prices are driven by domestic demand and supply, and we do expect some firming up. If the cost pressures recede, then maybe not much, but otherwise there would be some further increases we'll see in November, December. HRC prices are largely driven by what's happening globally and what China is doing. So currently, China is, facing a very, demand slowdown, and they have, despite the cuts in production, they have large, surplus. So that is going to keep a lid on HRC prices. So HRC prices, I don't see going up too much unless coking coal goes further from here on.
Rakesh, how do you see the differential between the Chinese prices and the Indian prices at this point in time? Do you see this differential narrowing anytime soon, or because of the kind of we have seen some demand and prices inching up here?
So, see, what is happening is that India, everybody is also expanding capacity, and avenues to export out surpluses are reducing. Like European Union is, putting in stricter import controls. So is all other countries. So export is not one of the options to release, excess production. And since in India, if you see, all the three major steel companies are doing rapid expansion. So Indian prices, that's why I was trading at below the import parity price, despite the safeguard duty and all. So I think, given the surplus in domestic market, hot rolled coal prices will remain a little bit muted.
Rakesh, hi, this is Harsha. How are you seeing the Mines and Minerals Development and Regulation Act, which has just gotten amended, and who would the key beneficiaries of this be, in your opinion?
So there are, two, three key things which emerge from this. One is state government, ability to tax mineral has been curtailed, and also, there were some retrospective duties from 2005, which was an overhang on, companies like Coal India, Tata Steel, and NMDC and all. So that overhang is removed. The other aspect is that, now mining companies will be able to mine other minerals in their area, like, Hindustan Zinc, having zinc, copper, or the cadmium, or, some smaller byproducts which they can mine. So mining companies will benefit because they will be able to now explore and try and figure out if there are urgent mineral available in their mining leases. So that's the second, benefit. But overall, I would say that, stocks haven't really moved much despite this bill being cleared. because nobody was expecting those kind of huge duties to come through. And so it's a relief, but since it was not built into the stock prices haven't really moved much. And mining, etc., is a long-term impact. So short-term, there's no impact, but overall, good move by the government.
Rakesh, you mentioned about the fact that Q2 margins will be, slightly lower than Q1. Do you think that this benefit of the Mining Act will help in offsetting some of the margin impact?
Those were contingent liabilities. So those of they don't come into the P&L, so it doesn't really impact the P&L.
Forward?
Going forward, Rakesh, what about that?
Sorry, can you repeat your question?
I'm saying going forward for the future mining, where the cost, whether state royalties would be reduced, will that help in offsetting this, will it be a cushion for some of the companies?
No, so we need to wait and see because central government would set the limits. So maybe they might set the limits around what the state governments are charging currently. And so we have to wait and see. There's no clarity on that. But, given that most of these states are governed by BJP and central also BJP, maybe they might stop at the current, levies which state governments are charging.
Okay. Rakesh, thank you so much for joining us. We'll let you go, and thank you for waiting by very patiently. Sincere apologies for having to make you wait.
Thank you.